Hey, what's going on? It's John Casman here with Multifamily Mastery on the Best Ever CRE show. I'm super excited today. We're going to be talking to Ashley Garner. Ashley, how are you doing today?
Hey, John, I'm doing great. Good to talk to you. Thanks for having me on.
Likewise, man. Listen, excited to chat with you today. Why don't you give our listeners a little bit about your background? Take 2 minutes and fill in some of those gaps.
Yeah, you got it. Um, I'm one of those probably rare people that grew up in the rental business, and I say grew up, I mean literally like when I was in high school, my dad started buying old houses and converting, like internally subdividing them into student rentals in a college town. So I like fixed the toilets and put on the vinyl siding and did all that. And then, kind of grew through it into the leasing and the finance and the operations and all those things. I've never had a quote unquote real job. Like I'd be a really bad employee for anyone else, but everything I've done has always been around real estate. And I've had my own property management where I manage my own units, and I've gotten away from that. I have a small team of residential brokers that work for me on the sales side. But my true passion is multifamily investments and the pursuit of passive income and financial freedom.
So you mentioned growing up in the space, right? Working with your dad on some of those fixer-upper properties and, really focusing on that a lot, not really having a regular day-to-day job or W-2 job. You really focused on real estate investing. And now you do a little bit with the brokerage side and having some agents, managing some properties, but really the focus is multifamily acquisitions, managing properties, generating passive income, and ultimately trying to create generational wealth. Can you talk a little bit about kind of that journey? You've been in this space for a long time. What led you to multifamily as opposed to maybe another asset class?
Man, that's a great question. Well, again, part of it is that residential rentals are what I knew on a real small, like mom and pop hands-on basis. But so then I took a kind of my career path led me toward the residential brokerage for a while, in which I was actually like representing buyers and sellers. And when I say that I never had a W-2 job, and then I was in real estate, and I thought, well, I can control my own time and I can do whatever I want. But I quickly realized that even though I was in the eyes of the IRS, I was a 1099 guy as opposed to a W-2 guy. I still had to work. I still had to clock in. And if I didn't wake up, take a shower, and go to work, I didn't get paid. And it just never kind of fit right with me that all we're here for on this earth is to like work, and then you either retire or you die and you don't make any more money. And so I then said, okay, well, I've got to grow my passive income. So I started down the normal path of buying single families, triplexes, then a 10 unit. Um, and then an interesting thing happened. Two interesting things. One, I quickly realized that I was going to be mathematically eliminated. In other words, I wasn't going to be able to live long enough at the pace I was going to get to the financial goal that I had. And then I had a heart attack, cardiac arrest, and they had to shock me back 5 different times that day. And, I almost didn't make it. And so talk about a sledgehammer to the face and making you realize like, okay, this is a real pursuit. If you want to leave something for your family, if you want something to happen, if you get sick or if you pass away and you want income to continue, then this is one of the main ways to do it. And so at that point, I really shifted my focus into scaling up and going into larger properties so that I could have that to pass on.
Yeah, I appreciate you sharing that. That's tough, and obviously, great to talk to you today. It looks like you're doing well. Hopefully, a lot better
Yeah.
health wise.
Yeah.
But talking about that transition, and you cut your teeth in residential real estate. You were independent, so you didn't have a boss or to clock in, but you still had to grind it out.
Oh,
And
yeah.
ultimately, you realized, hey, if I want to have something to share, if I want to create generational wealth or just really create assets, I'm gonna have to approach this differently than what I'm doing today. That heart attack really opened up your mind to say, "Wow, this is not working, and I need to have a different path."
Hmm.
So many of our listeners are interested in building a portfolio, And some of them are actually, taking the right steps and taking the action. But maybe they, hopefully don't have a heart attack that
Yeah,
jolts them
I
into
don't know.
action. But usually it's something. There's a trigger of some sort
Mhm.
that makes people take action. And I just want you to know, you can learn from someone like Ashley. Take a look at where you're at, what you're going through, and what does it take to get to the next level. I know for me, it was bankruptcy for the company I was working at. I
Mhm.
was working at an agency, and the agency ended up going bankrupt, and completely out of the blues, like on a Wednesday afternoon is when I found out. The CEO didn't even know. I mean, I got called him, and he was like, "Wait, what? What's going on?" And I'm like, "Oh my goodness, this is crazy." And it just showed me, like, at the end of the day, you've got to take control over your financial future. You can't really allow someone else to have full control over that. So, I love that. I love the fact that you were able to make that pivot. Can you talk to me about where your focus is today?
Yeah, so like I said, my focus at that point shifted quickly to larger properties, and because it's all the same business. It's just how many times can you multiply it by something. And so I went then from a 30 to a 32 unit place, and then to a 38 unit place. And then most recently in February of 2025, we acquired a 196 unit place. And so our next, the bar that we have set, the next immediate goal is 1,000 units. And so
Wow.
right now we're roughly around 300 units, and we'd like to add another 200 in 2025, 200 or more. Um, and the larger the properties, the better. Hopefully, I can acquire another one that's one property that's at least 200 units or more. Um,
When you said from 32 units, 38 to 196, looking to acquire up to 1,000 units here,
right.
what was the largest property you did before that 32 unit?
The largest one that I did before the 32 unit was a 10 unit.
Okay, so talk to me about that progression, right? Going from a 10 unit building to a 32 unit building. Did you have to what changes did you have to make in order to make that transition?
I'll tell you that was one of the biggest mind shifts I had to make between those two properties. So the 10 unit property, I was able to buy by myself with my own money. I was able to fix it up. A lot of it swinging the hammer myself, but I didn't have to go outside for partners. Then when I found the 32 unit opportunity, believe it or not, I bought the 32 units for $1.2 million, believe it or not. And if you do that math, I wish I could find something at that price today. But what it causes, I needed roughly $350,000 in cash to use the down payment portion of the acquisition, and I was going to borrow the rest. Well, the problem is I didn't have the $350,000 in cash. So I asked a buddy of mine. I said, "Man, would would I've got this opportunity? The numbers are really good. Um, I want to buy it. Would you guys be interested in putting some money into it so that we can go buy it and we'll partner up?" And he said, "Yeah, I'd love to look at that." He said, "How much do you need?" And I said, "Well, I need 350,000." And I said, "What do you think you'd be in for? Like maybe 50 grand or something?" And he said, "No." He said, "If we do it at all, we're just going to do all of it." And for me, that was like, holy moly! Wait a minute. I just made one phone call. I got all the money I needed, and now I can go buy this place, and I don't have a penny of my own cash into it. And now that was like, and you read the books, and that's what the book says to do. But when it really happens to you in real life, it is a big difference. And so that was the main shift I had to make, is using other people's money, but realizing that the money's there.
And it sounds clickbait, right? Like if I tell you, oh, how you bought this 32 unit building using none of your own money and you only made one phone call,
Right.
it sounds ridiculous.
Right.
But here you are. You live in proof that, this thing works out. So that mindset shift of being open to partner with someone else and making that phone call allowed you to scale. Let's stick there though, because
Okay.
many people will come across that opportunity and they're not going to make that phone call.
Mhm.
What gave you the confidence to reach out to that friend? How much of that is relationship? How much did you know about them, their interest in investing? Help us dissect that so maybe we can replicate that ourselves.
Sure thing. So I did have a relationship with this person. I've known him, since college, and I knew that they and their family were open to discussing things like this. Um, but I'll tell you, I was very nervous to make the call. I don't know why. You feel like you call and have to ask for money, and like I don't know. I felt like it's a little bit of like a bit of a failure on my part that I don't have the money to begin with to go buy it by myself. But again, what I quickly realized was after I made the call and they said they would do it all, is that like as a good friend, I kind of owed it to them to call them and give them this opportunity. I mean, it was a great they've made a ton of money on this deal. We've made long ago we've made all of our money back so that now nobody has any money into it and we still just keep getting paid every month. And if I didn't call and offer that to them, they would have missed out on that opportunity and I would have missed out on the opportunity to be a part of it myself. So it was a win-win.
Yeah. And I think the thing there is that, one, when we talk about this journey that you're on, right? You had a lot of experience in real estate, but you made that transition from residential, now doing smaller multifamily. But going from 10 to 32 units, you needed help.
Yes.
And it's okay to need help. And to your point, you may have felt a certain way because you didn't have all the funds to do the deal yourself. I look at it differently. I look at it from a service standpoint to say, you came across a great opportunity and you had somebody in mind who you thought could benefit from it. And they did. And I'm sure they're very happy
Oh yeah.
that they invested that money with you. They got 100%, infinity return now that they got their money back and you're still cashing on this deal.
Mm-hmm.
And that's a service because you took the time, energy, and effort to go out there and find a deal. And while we didn't talk a lot about it, clearly there was a level of comfort they had with you, right?
Oh, yeah.
Based on what they were watching you do. This is a friend you had since college. So he was able to see you. He saw you as credible. He knew what you were doing in the space. And this wasn't your first deal, right? It may have been your largest deal, but I'm sure you were able to talk about the 10-unit deal that you owned and some of the successes you had there and what your vision was for the property.
For sure.
Now, were you the ones primarily managing this asset or did you kind of share responsibilities there?
Yeah, you mean between me and my friend who's my partner?
Yes.
Yeah, I do it all. They don't manage it at all. Their job was providing the capital so that we could buy it, and my job was finding it and running it. So they actually put the money in, and they just get a check every month. They don't have to do anything.
I love it, man. You talk about passive income. That's exactly what we're talking about.
Yes.
And I think the key, again, is you had to make that phone call.
Right.
You may have been nervous. You may have felt a certain way, but you made the phone call. And you won't know unless you ask. So kudos to you.
That's
and
right.
It's one thing we got to remember on our journey. Sometimes you got to make the phone call. You just have to make the ask. And sometimes they say no. You got to find a different way. So I appreciate you sharing that.
Yeah, you're welcome.
That was 32 units, man. Right. So you said 32 to 38.
Right.
So that's a natural, so a little bit more units there. And then 196. Now that's a big leap.
That's a big
all right.
Leap. Yeah.
How do you go from 38 units to 196?
Man,
I love the deep sigh before you respond.
it is I've been I don't do skydiving or any of those kind of like high adrenaline sports. Like this is my adrenaline rush. So I can even feel that feeling coming back when we decided we were going to make this offer. But we knew we wanted to get bigger, and again, because we have these goals of financial freedom that and I will be quite honest with you, and I'm very grateful for this. Because of what I've done so far, I technically have reached that goal of financial freedom. If nothing changed in my life, I could pay my bills from the apartment, and that's fabulous. But then you get there and you say, well, what about the next generation and the next generation? What about weddings and college and retirement and all these things? And you realize, okay, there's more than I can accomplish here. So we decided we wanted to reach that goal of 1,000 units. And it's just math. If you divide 1,000 by too small of a number, it just takes too long. And we knew we had to go bigger, so we started underwriting larger properties. And the profit and loss, the pro forma, everything's the same. It's all the same. It's just a bigger number on the line. And so what the biggest thing for us was, okay, now we've got to go out and raise $8 million. And that was the challenge. And
That's a
say,
lot bigger than 350.
indeed it was. And it was hard. The other thing that was different, and mainly different because it's the lingo and just you don't know like who to ask what question, are the different types of financing that you have available to you when you're buying a $20 million plus property. It's not a regional bank anymore. You're looking at bigger things, agencies or CMBS and all. So you have to learn the players. You have to make the new relationships with the brokers, the lenders, and those types of things. But in the end, it's all still the same. It's all a relationship. And so that was the raising the capital was the biggest hurdle to get over.
So let's break it down a little more, right? So 196 units, you had to raise $8 million, which is a lot more than what you had to raise on those previous deals.
Right.
You're talking about different bank, lots of different things there, but a lot of the things were the same, right? The underwriting, the process, things like that were the same, but you had to make the adjustments to go bigger. Um, how does one raise 8 million when you've only raised, less than $1 million on
Yeah.
the previous deals?
Well, so really everything is relationships to me. At least that's my perspective. And what happened was I had a nice database of friends, family, past clients, etc. And so initially we went in targeting that database, and we got about halfway there uh, to our goal from that database, and then we hit kind of a brick wall. And what happened is we kind of outgrew our database, right? And the relationships that we had. So we have to make new relationships. And I'll be quite honest with you, John, like we we are still have a lot to learn there. We're still trying now to like utilize new tools like websites and social media, and ways to ways to meet new people in the world, not just here in my little area. But once you meet them, it's about getting that relationship, because they have to know you, like you, and trust you. And if they do that, then you have a chance to get them in the deal. It's very few people that will see a deal and just invest in the number without knowing the person behind the deal. And that's the key for me, is how do I get to know more people and let them know that they can trust me to handle their money.
Yeah, and that's it, right? It's a relationship business. You hear people say that all the time, but the truth is people have to know you, like you, trust you, and on top of that, they really have to believe in the opportunity. And I think one of the things that happens with newer investors trying to raise money is they stay focused on their friends and family.
Mhm.
And it's a great place to start, but eventually you will run out of that network.
Right.
You have to expand your network. Even if they all said yes,
Right.
eventually you're going to have all their money tied up in deals.
That's right.
So you're going to have to expand your network.
Mhm.
And that's where, again, leveraging social media and understanding how marketing works, that comes in handy. And it took me a while to figure that out as well. But once I did, it was like, okay, now we understand how to scale and how to grow.
Mhm.
So that's great to hear you say that. One of the things that we have that we work on is we try to make sure we educate our potential investors, and we put together a guide. It's 7 questions you must ask before investing in apartments. So we have that available on our website.
Mhm.
And I'm curious for you, when you started to do this large deal and raising the 8 million and kind of expanding beyond the initial database, what kind of things were you doing to attract or to get in front of additional investors?
Yeah, sure. Well, so we went, I guess, the traditional route. We had to get our website together. And then, we started broadcasting it kind of on a grassroots level on our social media. And then we did some webinars and things like that. And again, those things work. But what I realized, if I'm going to create a business out of this and something that I can do again to reach my 1,000 units, that I really got to get that stuff set up well, standardized, and kind of on autopilot so that it runs at all times and I'm providing something of value to people that I've never met before. What makes me stand out? Why would they want to click this button versus click the other button? And so we are still very much learning. I'm employing things like virtual assistants and uh, you know AI and these types of tools to help us leverage our time and other people's talents so that we can reach out. Because we really do believe that we have a good opportunity. We're not the only game in town by any means, but the opportunity that we do have will benefit somebody if they choose to participate. So we're just trying to tell that story.
And actually, I love it too. We talk about the journey, right? So you're kind of at this place in your journey where you're still scaling. You're
Yeah,
scaling, you're now putting in more systems, more processes. You're learning, okay, how do we do this and be able to repeat it and be able to
right,
predict it and be able to anticipate certain things as opposed to, kind of just bootstrapping it and
right.
making a bunch of phone calls and doing it the hard way, right?
Yep.
And that's the beauty of technology. And if you can align yourself with folks who understand the processes, the systems, who've done this consistently, it's going to make your life a lot easier. So I appreciate you sharing a little bit more about where you're at on your journey. Can we talk about kind of how you manage these deals, right? So we've kind of talked about where you're at on the acquisition side of them.
Mhm.
What have you seen in the marketplace? Like, what are some insights you've uncovered for just managing these properties that you've built?
Yeah. Um, so our personal setup is that we use a third party property manager for every property. And like I said, in the introduction, I did used to manage my own properties, and I had the staff, and we used Appfolio, and we did all the things. For me, it just fits better with my personality and my style to outsource that, and I can focus on some other things. Um, and so really, just the kind of the way you and I are talking right here, I have weekly meetings with the property managers, and I stand right here at this desk with this camera, and we go through our online spreadsheets, tracking KPIs. We talk about whatever projects that we've got going on, and then we adjourn the meeting. And the properties that I've had for a while and are kind of on autopilot, if you will, those meetings are pretty short. The property like the new one that we acquired, and we've got a lot of projects going on. We've got all kinds of stuff that we're settling out and setting up. Those meetings take a little bit longer, but soon that one will be on autopilot also. So really my job on the operations becomes managing the manager and watching the financial statement.
When you talk about managing the manager, like what are some tips or insights you would share with folks on that process? Because I know a lot of folks say, "Hey, get a property, we'll just hire a third party manager," and then they wipe their hands of it and
Mhm.
they kick their feet up, and sometimes that could lead to disaster.
Mhm.
So, what are some tips and insights you've uncovered there?
Yeah, man, I think what you said about hiring a manager and then just forgetting about it, I think that's a huge mistake. You have to be involved. However, my personality is that I get sometimes too involved. So for me, I have to make sure that I like stay in my lane, right? In fact, I dealt with this morning, and some of this scribbling on the whiteboard behind me. I kind of got like, yeah, I was dealing with a vendor and I was going to pay them directly because it was a buddy of mine. And I realized, wait a minute, man, the flow is this: it goes from here to here to here. You just made it go down here and you got everybody out of whack. Stay in your lane, let the processes work. And so I caught myself before I made the mistake and got back in my lane. But the managers, if you vet them out, you get the recommendations, and if they know what they're doing, then on a operational level, kind of stay out of their way. But as from an owner level, it's important that you understand what's going on. You may not be in there like pushing the buttons yourself, but you still need to know what they're doing and you need to understand it. That's where our weekly meetings come in.
So the weekly meetings, you mentioned kind of going over KPIs and financials and things like that. How do you handle disagreements or, maybe I guess we'll just call them disagreements.
Yeah, I think part of it is becoming more mature. I don't know if it shows here, but I do have gray hair. And when I didn't have gray hair, I probably handled things a little differently. Like it needed to be my way or the highway. And that's again, it comes back to hiring good people. You got to have a team, and if you're going to have a team, you need to be able to trust them. And so, I ask lots of questions. I like to understand things. And so as long as I can get my questions answered, then I'm okay and I stay out of people's way. Um, a disagreement, ultimately, if I want to paint the building purple and they disagree and think it should be yellow, well, it's my decision, it's my building, and if I say it's going to be purple, then they'll paint it purple. They may think I'm a ding dong for doing it, but they would do it. Um, but we don't really have many disagreements that are insurmountable. In other words, I don't tell them how to run their show. Um, as long as I understand and I see, like, I track my occupancy and my rent rolls and those types of things. As long as those are moving the direction I want them to move in, then I kind of stay out of the little intricacies of how it happens.
Yeah, I think it's great feedback, right? Because it's very easy to be a micromanager when it's a property you own.
Mhm.
And a lot of investors will talk about that where, hey, no one's going to care about the property the way you do. You're the owner. And there's definitely some validity to that. However, I do think that when you work with whether it be your own property management or third party property management, leadership is really important too. And everyone wants to work for an organization or a cause that's going somewhere. Everyone wants to feel empowered. Everyone wants to do a good job.
True.
And when you strip people of that ability, it really hurts their chances of bringing pride to the table. Now they're just going to stop thinking. They're just going to wait for you to tell them what to do, right? And they
Yeah.
kind of shut down. And you don't want to have that. You want
Mhm.
people who are self starters, who are looking to be a problem solver. And you have to empower them a little bit so that they have responsibility. And one of the things we saw at our properties is, with our on-site property managers, we try to talk to them to understand, their process, what they're looking at with making a decision. We try to make sure they understand our goals and objectives with what we're trying to get accomplished. And we're giving them enough freedom
Mhm.
so that they can make the best decision, even if they couldn't access us or talk to us.
Right.
But we're still talking to them on a weekly
Yeah.
basis so that they understand and they can get that feedback and direction, right? But it's treating them like, again, good employees, people who you want to foster, people you want to nurture, people you want to see grow and succeed. But they need some insights to do that too. I think it's also not fair. And what a mistake I see a lot of people make is they treat their property managers as if they should know what to do. But, Ashley and I may have two completely different theories on our KPIs, right? You might say,
Right.
hey, I want to keep occupancy high. I want to have minimal turnovers. I don't want to have to deal with that and pay all this money to turn a unit. So keep occupancy high. I may, on the other hand, want to squeeze out every dollar possible. So
Hmm.
I'm like, hey, put the rents at $2,000. If people move, they move. And we'll just go ahead and keep pushing the rents, right?
Hmm.
That's two different approaches. So when they come up and talk to tenants, they're probably going to approach those conversations very differently. So you really do have to make sure these property managers understand what your goals are, your philosophy, your wishes, and your
Yeah.
wishes and the way you want to approach the business, because that may challenge how they operate as a manager. And a lot of times we don't give that to them. So they don't know. And then we just end up blaming the property manager. And it's like,
Right.
well, did you really teach them and tell them what you wanted and what your expectations were? Or did you assume that they knew it just because it's something that you think is common sense? So definitely making sure that you set that expectation, I think, is key.
Hmm.
And you talked about giving them enough leeway to do that, but making sure that you stay involved in the conversation.
Yeah.
Hey, Ashley, as we talked about your journey We talked about you starting off on the residential side, scaling in a smaller multifamily, eventually moving over to larger multifamily. What's next for you?
Yeah, so that's a great question, and we are right in the middle of this growing, like you kind of hit on before. I'm in this process of trying to scale, right? So after we bought the 196 unit place, um, we kind of the you get the bug even more, like, all right, we did it, now let's go get some more. And we have decided here recently, even as recent as last week, we said, all right, hold on a minute, we've got these four basic like pillars of our business, right? And we need to standardize that. We need to get our business in order before we go just growing and buying a bunch of properties that we can't manage. Um, because so therefore we're focusing a lot on our standard operating or procedures or our SOPs right now for the financial part of it, the customer experience and excellent, like the service excellence part of it, and the marketing of it, or investor relations, and then the acquisitions part. So those four main things that we're working on right now to standardize, like, hey, this is how we do it. Boom, boom, boom. Now there's some leeway, but in other words, we don't have to reinvent the wheel every time we go buy a new property or every time we underwrite a property. We've got a standard operating procedure on how to do that. And that allows us to delegate some of those things to people inside of our organization at this level. Um, and then, we know that the property managers, they have their standard operating procedures as well. But again, that's part of our vetting of them and getting to know them, is to understand how they operate. So we make sure we're aligned before we get into that relationship with the property manager.
Yeah, I love it, Ashley. I mean, you talked about, hey, while we want to grow and scale and go acquire more properties, we also recognize it's really important to strengthen our systems and processes first. So you're really going to take a quick step back, take a look at those systems,
Mm-hmm.
get some SOPs in place. And that's going to allow you to actually run faster in the future where you have more of this outlined and everyone's aware of
Right.
how you want to follow certain processes and procedures so that it's not reinventing the wheel every single time. You know exactly what it is you're trying to do and everyone's moving in the same direction.
Yeah.
Ashley, I really appreciate, kind of the insights you shared and being open and honest about where you're at in your journey. And I think it's really helpful for our listeners to hear someone like you talk about kind of the path and the progression that you've been on. For folks that want to learn more, check out Ashley and his website. You can go to abgmultifamily.com. We'll put a link to that in the show notes. Ashley, thanks again for being a great guest and coming here on Multifamily Mastery on the Best Ever CRE Podcast Network. We look forward to staying in touch with you, and I hope you have a great day.
Thank you, John. I'm happy to be here. Thanks for having me. Take care.